Hello, my name is Austin Culbertson, and this is my General Electric case study final project narrated presentation. Here are some interesting facts about General Electric's history. General Electric was founded in 1892 through the merger between Edison General Electric and the Thomson-Houston Electric Company. With help and inventions by Thomas Edison, General Electric used to be responsible for many cities' electricity and power structures in the United States. CEO Jack Welch expanded GE beyond electric and introduced GE Capital, which was a financial service. After Welch, new CEO Jeffrey Immelt took over and brought about the changes of turning GE into three of their own separate companies, which includes GE Aerospace, GE Vernova, and GE Healthcare. Much of today's focus on the company is solely on GE Aerospace. General Electric has produced engines for aircrafts and produced military technology. They have built their brand of GE Aerospace mostly on innovation and maintenance for engines for the companies and military that use them. This created a recurring revenue model for the company, and this in return has made them a well-known powerhouse in their respective industry. And this was a fun PowerPoint to make because I live very close to the headquarters of General Electric. Corporate level strategy and how it's implemented. The corporate level strategy that General Electric is using is a growth strategy. They are implementing this in a variety of ways. For one, General Electric is getting revenue from their high margin services like engine maintenance and overhauls. They are implementing this by locking in long-term contracts with airline companies and military to be their long-term service agreements, which is getting them high recurring revenue every single year. General Electric is also funding major research and development and scaling, which is high capital costs, and they are implementing this by having joint ventures with other companies and sharing these costs while taking over the global shares. Here are the business lines of General Electric. General Electric's General Electric Aerospace has two business lines. This includes the Commercial Engine and Services Division and the Defense and Systems Unit. Here's a little bit about the Commercial Engine and Services Division. They design commercial engines and services them for airlines, and they make sure speed and quality is in line with the supply chain. Here's a little bit about Defense and Systems Unit. This is the business line catered only to military and defense supplies. They supply engines and services them for most United States military helicopters and planes like tankers, fighter jets, and transport planes. They develop state-of-the-art technology for the military to ensure that they have top-of-the-line engines and other technology that they need. Here's the business level strategy and how it's implemented. The business level strategy that General Electric is using is a differentiation strategy. General Electric is standing out against their competition solely because of what they offer being so complex. And this is implemented because many of the products that General Electric offers can be tailored to the exact needs of the customer or company in which they are selling to. They are using this advanced technology and are attempting to have greater performance measures than of other companies. They spend so much and put all that money towards their research and development, which allows them to keep developing and innovating more than competition and to make things in which that other companies cannot replicate. SWOT, strengths, weaknesses, opportunities, and threats. Here's the strengths. One strength that General Electric possesses is that each year they have strong revenue growths. Another thing is that General Electric is a brand that is well known to a global extent. The last thing is that General Electric has a major strength by having long-term contracts in place with companies for servicing of their products, which keeps them as customers and keeps them coming back. Here's a little bit about their weaknesses. One weakness that General Electric has is that they have higher operating costs while being in the aerospace industry. Another thing is that investors expect them to always do well financially, and there is lots of pressure to perform. And the last thing is that General Electric is put on such a pedestal that they have such a high valuation. Here are the opportunities. One opportunity would be if global travel via planes keeps increasing, this will mean that there'll be a continued need for maintenance and servicing. Another thing is that if there's more need for servicing, this will allow GE to expand their position globally more than it already is. The last thing is that GE can work to keep extending military contracts and deals and capture these deals before other companies do. Here are the threats. Inflation could be a big threat to General Electric. This can make investors weary of any negative changes to stock. Another thing is higher operational costs could lessen the profit margins. And the last thing, and in my opinion, the biggest threat would be trade conflicts or tariffs, because this could hurt any international business GE conducts and it could be very costly to get around. Here are my recommendations for General Electric, the whys and the hows. My first recommendation is that General Electric needs to keep investing in research and development, R&D, and here's why. It allows them to maintain their business strategy of differentiation, and it keeps them ahead of competitors like RTX who could be spending less and not investing as much. With a return of invested capital 22.3%, this shows GE is getting a strong return on investment since they are over the benchmark of the industry of 9.3%. Under the benchmark of industry turnover ratio of 2.5 to 4.5 with a 2.44, because GE takes longer to develop products and the margins are bigger, which will continue to grow by investing in R&D. How? This will allow General Electric to keep investing in next generation engines and innovation between both commercial and military. Recommendation 2. General Electric needs to keep expanding their global service operations. Why? The demand for air travel is something that keeps growing, and their service contracts give recurring revenue due to the length of them. They have a debt to asset ratio of 16%, which is below industry average of 30 to 40%. This shows that GE isn't having to debt finance as much as the other companies, which shows the profitability gap in leverage to General Electric. How? GE can keep opening international service facilities, they keep expanding maintenance and overhaul facilities, and it would create more partnerships with airlines than they already have. My third recommendation is that General Electric needs to keep improving their supply chain. The why is that it will shorten costs in the long run and prevent and limit delays. With a debt to equity ratio of 1.08, which the industry benchmark is 0.52, this shows that General Electric can withhold more debt with the means to keep utilizing it to improve operations like the supply chain. With a price to earnings ratio of 48.27, which is over the industry benchmark of 36.34, this shows that General Electric's investors will pay strong on their stocks because they know the reliability and consistency that GE gives in terms of being profitable per quarter. How? Utilizing AI and data analytics is big right now and can be utilized. They need to also keep investing in manufacturing and maintain their relationships with suppliers. Here are my references. Thank you.